while you're watching this video right now. Three stocks are quietly setting up for explosive moves that could happen before this month even ends. I'm not talking about some far-off potential or maybe someday gains. I am talking about companies with major catalysts lined up in the next few weeks that Wall Street is starting to wake up to, but Main Street hasn't caught on yet. The difference between acting now and waiting even 2 weeks could be the difference between riding a wave up or watching it from the shore. So, if you've been sitting on cash waiting for the perfect moment, this might be it. In the next 6 minutes, I'm going to walk you through 3 stocks that have everything aligned for a strong January finish, and I'll explain exactly why the clock is ticking on these opportunities. Before we dive into these picks, let me quickly introduce myself if you're new here. I focus on finding actionable stock opportunities with clear catalysts and realistic timeframes, not just throwing darts at a board and hoping something sticks. Now, you might be wondering why I'm so focused on January specifically. Here's the thing. January has historically been a strong month for the market, but more importantly, we're in a unique window right now. Earnings season is ramping up, economic data is flowing in, and institutional investors are repositioning their portfolios for the rest of the year. That creates volatility, and volatility creates opportunity for those who know where to look. The 3 stocks I'm about to share aren't random picks. Each one has a specific catalyst or tailwind that could play out in the next 3 weeks. Before we continue though, quick legal disclaimer, nothing in this video is financial advice. I'm not a licensed financial advisor. This is for educational and entertainment purposes only. Always do your own research and consider your own financial situation before making any investment decisions. With that out of the way, let's get into these 3 stocks that could make your January very interesting. Stock number 1 is in the semiconductor space, and if you've been following the tech sector, you know that AI chips are still the hottest commodity on the planet. This particular company has been overshadowed by the big names like Nvidia and AMD, but it's positioned perfectly as a picks and shovels play in the AI infrastructure build-out. What makes this stock compelling right now is that they're reporting earnings in late January, and analyst estimates have been creeping up week after week. That's usually a sign that the company is going to beat expectations. And when semiconductor companies beat during a growth cycle, the stock can pop 10 to 15% in a single day. But here's the kicker, the valuation is still reasonable compared to its peers. While some chip stocks are trading at 50 or 60 times earnings, this one is sitting at around 30 times, which gives it room to run without looking overextended. The technical setup is also beautiful. The stock has been consolidating for the past month, forming a tight base, and it's sitting right at a key support level. If it breaks out above resistance in the next week or 2, we could see a strong move higher. The risk here is if the broader market sells off or if their earnings disappoint, but the setup is too good to ignore. If you believe AI infrastructure spending is going to continue growing, and all signs point to yes, then the semiconductor play deserves a spot on your radar before the month ends. Stock number 2 is a completely different animal. This is a healthcare stock specifically in the biotech sector, and it's one of those names that's been absolutely beaten down over the past year. I'm talking about a 50% decline from its highs, and the market has basically given up on it. But here's what changed recently. They just announced positive results from a phase 3 clinical trial for a drug that treats a pretty common chronic condition. The data was strong and the pathway to FDA approval looks clear. Now, biotech stocks are risky by nature, but when you have a company with a proven drug candidate, a clear regulatory path, and a stock price that's been decimated, you've got asymmetric risk-reward. The downside from here is limited because most of the bad news is already priced in. The upside, however, could be massive if they get FDA approval in the next few months. What's interesting about the January timing is that the company is presenting updated data at a major medical conference in mid-January, and any positive commentary there could light a fire under the stock. Institutional investors have been quietly accumulating shares over the past few weeks, which you can see in the unusual options activity and the increasing volume. This isn't a stock for the faint of heart, but if you have a stomach for volatility and you want a high-risk, high-reward play, this biotech could be your lottery ticket. Just make sure you size your position appropriately because biotech can be wild. Stock number 3 brings us into the energy sector, and I know what you're thinking. Energy stocks? Really? But hear me out. This isn't about oil and gas in the traditional sense. This is a renewable energy infrastructure company that builds and operates solar and wind farms, and they're benefiting from a perfect storm of tailwinds right now. First, government incentives for clean energy projects have been extended and expanded, which means more funding and more projects coming online. Second, electricity demand is skyrocketing because of AI data centers, and guess what powers those data centers? A lot of it is coming from renewable sources because tech companies have committed to carbon-neutral operations. Third, this particular company just signed 2 massive contracts with major utilities, and those contracts are going to significantly boost their revenue over the next 2 years. The stock is up about 20% over the past 3 months, but it's still trading below its fair value based on its forward earnings and cash flow projections. What makes this a January play specifically is that they re-hosting an investor day later this month where they expected to provide updated guidance and unveil their growth strategy for the next 5 years. If that guidance comes in strong, which analysts are expecting, we could see another leg up in the stock price. The risk here is regulatory changes or project delays, but the long-term trend toward renewable energy is undeniable, and this company is at the forefront of that transition. If you want exposure to the energy sector but you want something with a growth angle rather than a commodity play, this renewable infrastructure stock checks all the boxes. So there you have it, 3 stocks with very different profiles, but one thing in common, they all have catalysts that could play out before January ends. You've got a semiconductor play riding the AI wave with earnings on the horizon. You've got a beaten-down biotech with a potential turnaround story and a major catalyst coming up. And you've got a renewable energy infrastructure company benefiting from massive secular trends and about to provide updated guidance. The beauty of these 3 picks is that they're not correlated. If tech sells off, your energy and biotech positions might hold up. If healthcare takes a hit, your semiconductor exposure could carry you through. Diversification across sectors with different catalysts is how you manage risk while still giving yourself multiple shots at upside. Now, before you rush off to place trades, remember what I said at the beginning. This is not financial advice. These are ideas for you to research further. Look at the fundamentals, check the technicals, read the analyst reports, and most importantly, consider your own risk tolerance and investment timeline. Not every stock is right for every investor, and what works for my strategy might not work for yours. If you found this video helpful, do me a favor and hit that like button. It helps the algorithm show this content to more people who might benefit from it. And if you're not already subscribed, click that subscribe button and turn on notifications because I am constantly analyzing the market and finding opportunities like these. Drop a comment below and let me know which of these 3 stocks you find most interesting. Or if you have your own January picks, share them with the community. I love hearing different perspectives, and sometimes the best ideas come from you guys. In my next video, I'm going to be covering some potential market risks to watch out for in February, because it's not all sunshine and rainbows, and being prepared for downside is just as important as finding upside. Until then, do your research, invest wisely, and let's make this January count. I'll see you in the next one.